Hello, everybody. This is Matt Fick from Financial Life Planners, and this is your stock market update for the week of January 14th, 2025. As many of you hopefully know, the stock market had a really good year in 2024, but at the end of December, there was a little bit of a lull in the growth that we were experiencing from the rest of the year, and that kind of carried on to the beginning of January. Today, I wanted to talk to you guys about what's happening, what it's looking like, and what are some things that can happen in the near future that could change that direction and get us out of that lull. So I'm going to head right now to the charts and show you the S&P 500 and the NASDAQ. All right, and I promise not to spend too much time here, just to give you a visual idea of what's going on right now. So as you can see, this is S&P 500, and today we had a tick up. Finally, the market closed about 30 minutes ago, and we're seeing a little bit of a turn up here at the bottom of that chart right there. Here you can see all of 2024 and the growth we were experiencing there. And in the middle of December, a little bit of a kind of wavering back down, mostly sideways, but pulling back from those old highs we were seeing in the middle of December. And in the NASDAQ, it's much of the same. A little bit more aggressive, as many of you know, but I'll reiterate, the NASDAQ is comprised more of tech companies and top 100 tech leading companies. And so tech's getting hit a little harder than the S&P 500. So now, why is it potentially trading sideways right now? Why is it coming back down after it's been doing so well? I'm going to talk about some good news real quick, and then I'll go into some possibilities of why that might be happening. So the good news is the jobs reports recently, like I mentioned last time, were above expectations, and unemployment was below expectations. Employment was expected to be 4.2%. Right now, it's 4.1%. So why, with that good news, are we seeing a little bit sideways trading in the market? Well, part of the reason is that although we're seeing good news in the jobs market, inflation is still a little sticky and it's sticking around, which means interest rates are going to stay a little higher for longer. Higher for longer is not what the market wants to see, because when interest rates are higher, it's hard for these companies to borrow money. That's just a potential reason why the market is kind of trading sideways right now after that information. Another potential reason is the things going on in LA and unprecedented fires in LA, and seeing all this uncertainty that's going on and how that may have economic impacts on the larger economy, certainly the economy in California, but the United States economy as a whole is kind of uncertain. Like we always say, uncertainty is not what the market wants. The market wants certainty. And when you have this uncertainty, it kind of trades a little sideways. Now, I want to talk to you guys about some things that will be coming up that could get us out of this little slump that we're seeing in the market. The first thing is next week, next Monday, Trump's inauguration. Big news like that can affect the market one way or the other and get us out of the sideways trading that we're seeing. And as many of you know, we experienced a large gap up the day after Trump got elected. The market was excited to see him win the election, and now we'll see how it reacts to him actually getting into office. Another thing that's coming up as soon as tomorrow is earnings. And earnings, like I talked to you guys about a few months ago, can affect companies' stocks and the stock market as a whole, one way or the other. If a company posts bad earnings, obviously they're generally not going to see huge uptick in the company in the stock price. But earnings are happening this week, and it's the beginning of earnings seasons, and we'll see how companies are doing there and how that affects the market as a whole. This week, expect to see some financial companies, and financial sector is kind of a big leader in what might happen going forward. Companies like Bank of America and Goldman Sachs are reporting earnings this week, so something to keep an eye on there. Now, I talked to you guys about what's happening in the market, why it's happening, and what could potentially change that. And I just wanted to reiterate, at the end of the day, this is completely healthy and normal for a growing bull market, and nothing is showing any major red flags right now. That doesn't mean going forward that we're not ready to raise cash and get defensive for you guys if need be, but that's not what this is showing us right this second. That's all I have for you guys today, and I appreciate you taking the time to watch these videos every week. As always, feel free to reach out to us if you need anything by phone or email, and we'll talk to you guys next week. Bye-bye.